Hello everyone, I am Pratap here. We are at lesson 29. This lesson is about how to use NeoStock software generated different supply demand zone reports. To understand these reports, first you should complete our free supply demand zone price action training. And you know that the cost of our training is over 8,000 US dollars and it is completely the free training. All training videos are available at our NeoStock YouTube channel. At our channel homepage, you just click on the tab Posts. Some of you might be seeing the tab Community. So click on the Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training video lessons. You just click on the link. Now we are at Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one. And then you get into our lesson 29. Okay, what is this lesson 29? This is about how to use different supply demand zone reports generated by the NeoStock software. At present, I am generating these different supply demand zone reports. One is most important thing is the daily or 75 minutes HLQ zones. And we have over 80% success rate so far for these HLQ zones. So how best we can make use, I am going to explain in the first part of the video. And the second part of the video, I will explain bullish or bearish trade setups for different income trades. So I will release multiple videos for these reports. And we are also having stocks near or inside price closed near or inside the demand or supply zones. How some people will make use of these reports, that also I will explain. And in the last video, I will explain Nifty and Bank Nifty supply demand zone chain. So this video is dedicated to the first part of daily or 75 minutes HLQ zones. You have two parts of the videos. First part is about how to analyze daily or 75 minutes HLQ zones. I will explain from the reports how exactly we need to get those zones and how to analyze. And to understand this daily or 75 minutes HLQ zone analysis, you should have completed lesson 21. In the lesson 21, the third part of the video, I have explained HLQ zone strategy. It is a new strategy I developed. And our software identifies some special zones. We named it as high liquidity zones. Those zones might be having a strong institutional order flows. And those zones supports multiple testing. So because of all these reasons, we are having a very high probability of getting the success rate. And I also explained in lesson 21.3, that is the third part of lesson 21. So in that video, I have explained we take entry at fine-tuned 5-minute zones, but target is 15 minutes opposing side zone. So for example, your trade is a long trade in fine-tuned 5-minute zone. Your target is a 15 minutes supply zone. Similarly, if your trade is at a fine-tuned 5-minute supply zone, your target is 15 minutes demand zone. So that's why we have a good ROIs for our HLQ zones. But only thing is HLQ zone strategy should be applied only for daily or 75 minutes high liquidity zones, as I explained in lesson 21.3. And another limitation is whatever the software generated report, only in the next day only you have to use high liquidity zones. for daily and 75 minutes strategy. And after in the following day you can't use. You can use only if again software identifies those zones. Otherwise, whatever the software identifies HLQ zones, they are applicable only for the next trading session. But that is not the case with bullish or bearish trade setup stocks. Anyway, that we will discuss later in the next videos. Now I am going to focus only daily or 75 minutes HLQ zones. So how to analyze these stocks? How to analyze that? Everything I explained in detail in lesson 21.3. But now we will see more examples by taking from the reports. Okay, so let me generate the reports from daily time frame. I am generating stocks near daily demand zone, because HLQ zone strategy is applicable only for daily and 75 minutes time frames. Whatever I explained in lesson 21.3. Without completing lesson 21, don't go for HLQ zones. Okay, stocks near demand zone, you need to look for high liquidity zones. How many high liquidity demand zones we have? This is the first one and this is the second one, and third one is piercer zone. It is not useful. So we have only two valid high liquidity zones. First, let us start with one by one. This is a daily high liquidity demand zone. So we are in the daily time frame. Okay. So what is the timestamp? What is the leg-in? This is 8th August 2024 having 4 base candles. 8th August. See, this is a 8th August drop candle. This is a drop. You have 1, 2, 3, 4 base candles and a rally candle. So this is how our software identified this zone. This is a demand zone. I will give very light color. So this is a daily demand zone. And this daily demand zone you should fine tune with excuse me, this drop base rally daily demand zone you should fine tune with 75 minutes time frame. See, this is a high liquidity zone. How many times it is tested? First time it is tested, it pushed the prices. Second time came very close to the zone, again pushed. Third time again went into the zone, again pushed the market. Fourth time again pushed the prices up. Fifth time again pushed the prices up. So in the next trading day, if the prices are entering and if there is any fresh fine-tuned 5-minute zone, you can plan the trade. Or if there is any 5 minutes high liquidity zone, you can plan the trade. Multiple trades you can plan in the 5 minutes high liquidity zones. So we have to take a trade at 5-minute zone only. But target should be 15-minute zones. So I am going to the 75 minutes time frame. First let me check if there is any. See, here you have a failed ERC candle as a drop. You have 1, 2, 3, 4, 5 base candles and rally. That way you can draw this zone. So this is a 75-minute zone. This is a fine-tuned 75-minute zone. So this is acting as a high liquidity zone, maybe again. You see, again, once again, drop base rally is created. LOTL zones. When LOTL zones are created, probably that might be having characteristics of high liquidity zone. See, again it is tested here. Once again it is a drop base rally, another drop base rally. So again and again this zone is getting created. Last time also, see, once again it is tested and again moved. So this 75-minute zone is acting as a high liquidity zone. with multiple tests. See again here also, see drop base rally again created from this zone, it picked up. So that means the 75-minute zone is the origin. Okay, now let's go to the 15 minutes time frame. Let's verify in the 15 minutes time frame any order flows are here. So here you have a drop, base, rally is there. This is the 15 minutes order flow. This is a fine-tuned 15-minute zone. Is prices entered into this zone? Anytime came very close to this zone. So this is not it. But any more 15-minute zones are here? Let's verify. Here is again another 15-minute zone here, a little above. We have a rally, base, rally. And is this 15-minute zone is tested? Yes, in this candle it picked up sharply prices. And prices came near to the zone. See again here, multiple times prices came here, moved up, again came here, moved up. The recent time, let's check. Okay, anyway, this one is not entered into the 15-minute zone. But here again, within this 75 minutes fine-tuned zone, any 15 minutes, yes. Here again you have a rally, base, rally. So let me adjust within the zone. So we have three fine-tuned 15-minute zones. And this 15-minute zone, bottom one again acting as a high liquidity 15-minute zone. So now we have three order flows within this 75 minutes area. Let us fine tune with 5 minutes time frame. Are there any 5 minutes proper? Yes. So this is a rally candle, two base candles and a rally candle. Now you can draw a fine-tuned 5-minute zone. This is a fresh zone. How can we say fresh? Because prices haven't entered into this 15-minute zone so far. So that way this 5-minute zone is a fine-tuned zone. And what about here? Here we have a rally, two base candles and a rally with hidden body. If you add the hidden, it is a rally candle, again follow through candle. So definitely we have another fine-tuned 5-minute zone here. Is this fine-tuned 5-minute zone is tested? Yes. But is it supporting multiple testing? Then it could be a high liquidity zone. Let us check. See here. Already tested once, again second time, again third time. See again drop base rally is created. Again fourth time, here also drop base rally is created. So new order flows again and again. So this is a high liquidity zone. What is how we generally plan trades in high liquidity zone? We keep on trading the trades in high liquidity until one day it will get expiry period. On that day zone will be violated. That is okay for us. But until the zone violates, we will enjoy whatever the number of times the profits it is giving. And here you have again, this is a failed ERC candle, base candle and rally candle. So here again you draw a fine-tuned 5-minute zone. Is it tested? No, not yet. It seems. prices came very close and moved the recent time. Of course, we are drawing type 2 proximal entries. If you draw type 1 proximal, it looks like it is a tested zone. Why high liquidity zones? Inside the high liquidity zones, why we are giving importance to type 2 even though type 1 is tested? Actually, this is a tested zone. Recently someone asked this question. This is a tested zone because type 1 is tested. But why we are still depending on the type 2 is because it is a high liquidity zone. If it is not a high liquidity zone, the tested 5-minute zone we would not have accepted. We have higher risk of zone violation, but high liquidity zones, we have higher success rate will be there. Even though the type 1 is tested, maybe it may give one more chance in type 2 also. At least better success rate will be there. That's why if the risk is within your accepted limit, nothing wrong in planning a trade. But if type 1 and type 2 proximal lines are very close, then you have to avoid type 2 proximal entry if type 1 is already tested. If the distance is considerable and if you feel there is a good order flows are there in this area, definitely you can plan. And also the price action clue also, see how sharply prices moved. The moment it came here, see immediately they were started moving up. A big move it has given. So we have 3 order flows are there from this zone. Now you might be asking again, in this movement, any new order flows institutions have created. For that again go to the 75. Here you see drop to base candles and rally. Actually this is the origin, this 15-minute zone is the origin, but this is a 75-minute zone. Any new order flows are there in this area, probably it may be giving some. Do we really need to consider this rally base rally? Yeah, we may consider, but is this rally candle, is it a medium size candle? Somewhat question mark, but let us see. If the order flow is good, we will see. This is a 75-minute zone. Light color I am giving, rally base rally. Here also, here I have some concern about this candle. This is a very large candle. So that's why this is the area I am somewhat doubtful. Let me go to the and here the structure is it a medium size, but we will see in 5 minutes how it looks like. Actually you have to draw zone like this, but I am adjusting within this daily high liquidity zone. This is 15 minutes demand zone. This is 15 minutes fine-tuned demand zone. Inside 15, any proper 5-minute structures are there? Maybe drop base, drop, you can draw here. And it is already tested. It's a tested zone. Because it is a tested zone, there are higher chances that this demand zone might be violated. When this demand zone works, if it is a high liquidity zone, maybe it may support next time. That we will see only based on multiple testing only. But at this point of time, we can't have guarantee that this zone will work. So that's why we don't have any clarity in this area. That's why what I am doing, our concentration is in these order flows. These are the order flows within Abbot India. So this is how we planned our see, the biggest advantage with HLQ zone analysis is even we plan our trades against the trend and against the location, that is curve, or against the price direction. We don't bother all those things. Even we don't look into odd and enhancer scores. We just simply look for fine-tuned 5-minute zones. That's it. The fine-tuned 5-minute zone should be a fresh zone. At least at a type 2 proximal level, it should not have been tested earlier. That means prices should not get into that area. Many times high liquidity zones, the fine-tuned 5 minutes zones at type 2 proximal level, the order flows might be much stronger. Many times, at least 80% scenarios. Or if the zone is testing again and again, or if you confirm, our software confirms that could be a high liquidity either side. If the zone is testing multiple times, at least 80% level, we predict that could be a high liquidity zone. Our software generated supply demand zone chain reports if a zone displays as a high liquidity zones, that is a 100% high liquidity zone. So either way, but at present many of you are not having supply demand zone chain for all the stocks except Nifty and Bank Nifty. That is the reason why manually only at least 80% success level we can predict based on multiple testing. If that is the way, if we predict any fine-tuned 5-minute zone is a, or even without fine-tuned also we can plan aggressive trade. If there is any 5 minutes high liquidity zone but not a fine-tuned zone, still you can plan aggressive trade setups. So those zones we will keep on taking trades until the day it is violated. So these points we always should remember when you are analyzing the stocks. Lesson 21, you learned several aggressive trade setup concepts. Don't go for aggressive trade setups until you get a good experience. Initial stage, if you find any high liquidity zone as an aggressive trade setup, you accept that. But remaining scenarios, get some experience. Observe the old charts. Because many people are making mistakes when you are dealing with aggressive trade setups. So that's why initially focus only on the fine-tuned zones or high liquidity zones at 5 minutes level. Okay, this is about Abbot. What about the next stock? Next stock is AU Bank. AU Bank is also a high liquidity demand zone. This is also having high liquidity supply zone also. That is the case. Either side it may provide trade opportunities. Anyway, at present it is near to the demand zone. So when this zone was created, 14/1/2025. After that, one base candle. Daily demand zone. So we are in the daily time frame. This is the one big candle, a rally candle. This is a medium size candle, maybe because of the wicks software considered, maybe this is definitely between 50 to 75% level. Software is having its own measurement algorithm to consider the candle body is in between 50 to 75%. It will consider either base or leg candle depending on its algorithm rules. But when it comes to us manually, when you have to take your best decision, such kind of candle should consider as a base or medium size leg candle. If it is a medium size leg candle, you don't draw the zone. But anyway, software confirmed it is a base candle. So we are drawing because this is the 14th Jan. 14th Jan 2025 leg in, after that base candle, then 16th Jan 2025. This is 16th Jan. And this is a daily demand zone. Rally base rally is the daily demand zone. So this one we need to fine tune with 75 minutes time frame. So here you have a rally, 3 base candles and rally. we can draw a zone here. So this is the fine-tuned 75 minutes demand zone. Within this fine-tuned 75 minutes demand zone, we should look for again fine-tuned 15 minutes demand zone. Is there any fine-tuned 15 minutes? Yes. We have a rally base and a rally with hidden body. So this is the fine-tuned 15 minutes demand zone. If I hide the candle, you get clarity. See, rally, base and rally with hidden body. Now this, within this area, again we should look for fine-tuned 5 minute zone. Is there any fine-tuned 5 minute zone here? Yes. See, this is the candle, a large candle, 2 base candles and a rally candle with hidden body. So maybe this is a drop base rally, because this is a drop base rally. So from here until the low of the candle. So we have a demand zone, fine-tuned 5 minutes demand zone. So here you can plan your trade. If you look from daily time frame, see here we have all the fine-tuned zones within this area. This entire thing is daily. And this is 75. Within this 75, this is 15. Inside 15, a small area fine-tuned 5 minute zone. That's it. Very simple analysis. Generally, if multiple order flows is there, it takes a little extra time to draw the zones. You have only one order flow is there in this zone. So this is about AU Bank. Actually, AU Bank is also having a supply zone, right? High liquidity supply zone, already tested 4 times. This is a 51124, 2 base candles. So this is the one, 511. Consider as a drop candle, 2 base candles and drop candle. Actually this is again leg candle, medium size leg, part of the base. And this one supported with multiple testing. See how this zone is supported multi-testing all these days. This daily supply zone. Probably we have a 75 minute zone here. Yes. See, drop base, drop. This 75 minute zone is this fine-tuned 75 minute supply zone tested multiple times. Is it valid? Now it is violated. It is no more valid. So any other zones here? We have a drop candle, 1, 2, 3, 4 base candles. Again a drop candle here. But this is not really, because the leg out is part of the base. This is not a good one. But in the recently created, any, yes, have a rally, can we consider? No, anyway, it's not very clear here, but here we have a drop base drop. This is a rally base drop, or rally, 2 base candles and drop candle. That way we can draw. But anyway, our concentration is here. Some clarity, detailed analysis we have to do in this. Time being, let us focus on this. So this is about AU Bank. Next one is any other? We don't have any. This is PR zone. So that's it. These are the 2 daily demand zones we analyzed. Next, similarly, we should look for daily supply zones. Stocks near daily supply zone. We have 10 stocks. There could be some high liquidity supply zones. See here we have IRCTC, Marico, and Tata Steel. We have 3 high liquidity supply zones, 7 daily supply zones. So let us analyze one by one. Let's start with IRCTC. This is a 2-1-2025 one base candle. Sorry, we are in 7. We should look into the daily time frame. 2-1, this is the one. Rally base drop. This is what our software identified. IRCTC. Rally base drop. 2-1-25, one base candle. 6-1-25. This is 6-1-25. So let me draw the zone. So rally base drop, this is the daily high liquidity zone. And let us fine tune this zone with 75 minutes time frame. So we have a drop candle, we have medium size leg in, we have a one base candle, and then again a drop candle, ERC candle, big candle. And body is completely coming out of this zone. So definitely you can draw. But the highest wick of base or leg out, here leg out is there, that's why here I am drawing this is a fine-tuned 75 minute supply zone, and this 75 minute supply zone again we should fine-tune with 15 minutes time frame. Let's identify any 15 minute zone here. Yes, here also you have a rally candle, you have 1, 2, 3, 4 base candles and a drop candle. So almost this entire '75 is also a 15 minute zone. So this is a fine-tuned 15 minute supply zone. But have you noticed here? Rally to base candles, drop candle is created by picking the orders from this zone. But this time prices went deep and came down. So 2 times this area is tested. First time sharply came down, this time went deep and again came down. But anyway, let us look into the 5 minutes time frame. That is more important for us. In the 5 minutes time frame, this structure is not really good. This is a drop candle, no base candles here. But look in the recent time frame when prices entered. Now within this area, fine-tuned 15 minutes area, a new 5 minutes order flow is created. This is a fine-tuned 5 minute zone. See here, and it is a fresh zone. In this candle prices came close and then again sharply came. That means the order flow could be very strong in this area. That's it. See, we are analyzing the stocks. Generally, how we keep our target in the 15 minute zones. See, there is a possibility. Maybe what happens at present, what is the 15 minute zone? Here you have a drop, 2 base candles and a rally candle. This could be 15 minutes. That means you get a huge target. But what happens tomorrow when market starts? See here, you have a drop, base is there. There is a possibility a rally candle will be created. At the time, your target should be revised to this new target, drop base rally. In case if a rally candle is created. Without a rally candle creation, let us assume prices went in the morning 9:15 candle and again sharply came down. At the time your target is going to be, this is the zone. We have failed ERC base rally. This is a bigger one. Those who wants to use a trailing stop loss and target, maybe the next area you can target this in case if this is violated. If your trailing stop is violated, there you exit the trade. You learn all the concepts in your course. Those strategies you have to plan in the live market. That is up to your supply demand zones concepts point of view here, but my concentration is how best you can make use of the software. Software won't tell you how to fine tune the zone. Your training course will tell you. Software will give you the zones where the strong institutional order flows are there. That is the responsibility. That way it is helping you improve your efficiency. If you want to find such kind of zones by analyzing 240 stocks, is it practically possible? It is not practically possible. But quickly software has given, in just a fraction of a second, it gave you the results. You look into these zones and immediately in the minutes, you will identify high liquidity zones. After that, you spend some time for analyzing these stocks. So IRCTC is a daily high liquidity supply zone. We have a fine-tuned 5-minute zone here. So any other next one? Next, Marico. Marico already tested, see, 3 times this zone. So when this zone was created? 10-10-2024, 4 base candles. So in the daily time frame, this is the 10-10. See here, 1, 2, 3, 4. Fourth one is a medium size leg candle, part of the base, then drop candle. Our software identified this like this. This is the leg out coming out of this zone. And this is a daily supply zone. This is the daily supply zone. This daily supply zone we should fine tune with 75 minutes time frame. So in the 75 minutes time frame, are there any zones? Here you have a rally. Here also you have rally 1, 2, 3 base candles and a drop candle. So here also you have rally, 2 base candles, drop. LOTL scenario. Here also you see you have a drop, 3 base candles and drop. This is also LOTL, but this is the main institutional 75 minutes order flow. So this is acting as a high liquidity zone with multiple testing. Multiple times this zone was tested. And is there any 75 minute zone structure here? No, not proper structure. This is a bigger candle, but prices came inside the zone again. So you can't consider this because this is a rally base, rally will come, but zone is closed inside, it's not valid. This area is. Maybe here you have a drop, 2 base candles and drop. See, this is a valid zone, but prices are completely coming out of the zone. Maybe tomorrow it may come into this zone and again it will come down. That possibility is there, but we always stick to our rules. We focus inside the zone because we should not forget our main zone is daily zone here. So daily proximal you have to give importance. Your order flow should be above this daily proximal line, especially the 5 minutes order flows. Even 75 or 15 minute zone, a part is there outside is okay, acceptable. But 5 minutes order flow should be inside, or at least 5 minutes order flow should overlap. A part should be inside, a part should be outside of this daily proximal line. That way we have to make sure. But anyway, here we have an order flow 75 minutes. Let us check any high liquidity 5-minute zones or any fresh zones are available within this area, the 5 minutes time frame. Before that, we need to fine tune this 75 minute zone with 15 minutes time frame. So in the 15 minutes time frame, let us find any 15 minute zones are available here. We have drop base, drop is there, but this is already pierced, this drop base. But here you have a rally base drop. So this is the 15 minutes fine-tuned supply zone. Is it tested? No. So it is a fresh order flow within that area. And within this area, is there any 5 minutes fine-tuned zone? Let us verify. That is important. 5 minute zone should be essential. Yes, you can rally candle, a base candle, drop candle, medium size rally, medium size base, medium size drop. Maybe that way we can draw the zone. So this is the fine-tuned 5 minute zone. So this is a Marico. Earlier also prices came close to this, sharply came down. Maybe the order flow might be stronger here. So let's move on to the daily. This is the daily picture, the fine-tuned 5 minute zone in this area. We add Marico into our watch list. Okay, next one is Tata Steel. Tata Steel is a high liquidity. High liquidity means high priority, high liquidity zones. We don't focus on low priority, high liquidity zones. You can also use low priority, high liquidity zones, but their success rate is not 80%. Maybe it could be 60 or 55 or maybe 65 or 70, but definitely not 80%. Low priority, high liquidity zones you can use when you don't have any other high priority zones on your list, or you have only 1 or 2 stocks are there and you don't have confidence that those zones you may not be getting trades. At the time you can analyze low priority. Something is better than nothing, but their success rate is less compared to high priority, high liquidity zones. All those concepts I explained in lesson 21, 21.3. So in Tata Steel, when is the leg-in? You have 6-1. 2025 is the leg-in. Tata Steel. How many? 2 base candles. Six, this is the one. Drop base, drop. You add some more hidden body here. This is a drop candle, follow through candles. So this is the daily supply zone, drop base, drop. And this one we should fine tune with 75 minutes time frame. So in the 75 minutes, you have a drop candle, you have 1, 2, 3, 4 base candles. See here, add the hidden body. If you add hidden body, this is a drop candle. This is going to be a big candle. Drop candle. So it's a hidden zone. So I can draw a 75 minutes fine-tuned zone. So this is the fine-tuned 75 minutes zone. So within this area, do we have any 15 minutes fine-tuned zone? Let us verify. Yes. See, this is a drop failed ERC candle. You have 4 base candles. See again, hidden body. If you add the hidden body, this is a drop candle. This is the fine-tuned 15 minutes zone. Okay. So within this area, we should look for fine-tuned 5 minutes zone. So I'm going to the 5 minutes time frame. Let's verify if any fine-tuned zones are available. Some kind of okay, you had the hidden body, you will get a huge drop body here. Hidden body, drop candle you will get from the dynamic viewpoint of view. Maybe if I consider this as a rally candle, then we can identify a fine-tuned zone. But some concern I have this zone, not really comfortable with this zone. Maybe this is the area. If anybody can accept the risk. Why I have concern here? All these candles, you see, lot of consolidation took place here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. If you consider this also a base candle, if you consider this as a rally candle, then you have 1, 2, 3, 4 base candles drop. So that's why it's some ambiguity here we have. See, this is a drop, no doubt in that. If you consider all these base candles, so if it is a consolidation, you know what happens? This zone will easily violate. So this is the one we will observe this stock, Tata Steel. Trade point of view. See, when you have any doubt, just ignore the stock. Don't plan any trade. Just observe. You can draw and observe. Okay, if it works, maybe we miss the trade. Our observation is at least you get some experience because you have drawn and observing this zone. Maybe high liquidity zone's point of view, it may be a successful. If it is a consolidation, you know what happens? Easily this zone will be violated. See, when you have to plan your trades, you have 100% confidence that the fine-tuned 5-minute zone is a valid, then only you have to plan your trade. Even if you miss the trade, not a problem. So this is under observation, planning your real trades. Maybe this zone may work or may not work. So that's why we don't have 100% confidence because of the other price action in this area. It's about whether to consider this leg in or it should be a base candle. That kind of clarity we don't have. If you consider this is a valid leg in, then these 4 base candles drop, and moreover it is a hidden body. This is a hidden zone. There are higher chances this zone might be having strong institutional order flows. If it is a consolidation, maybe here institutional order flow is there, but most of the order flow is consumed here. When most of the order flows are consumed, what happens next time? Easily prices will breach this zone. Okay, this is about Tata Steel. Okay, next we should go to the 75 minutes time frame, because we are using high liquidity zones strategy only a daily and 75 minutes time frame. So in the 75 minutes time frame, stocks near 75 minutes demand zone. Let's verify. We don't have any 75 minutes high liquidity zones from this list. Okay, let us look for supply zones. 75 minutes time frame, stocks near 75 minutes supply zone. We got 11 stocks. Out of these 11, how many high liquidity zones are there? 75 minute supply zones. Let's verify. Balakrishna Industries is the first one. Delivery is the second one. Godrej Properties is the third one. JSW Steel is the fourth one. L&T is the fifth one. Maruti is the sixth one. We have 6 high liquidity 75 minute supply zones in this list. So let's analyze them. So Balakrishna Industries, we are in the 75 minutes time frame. So when is the leg-in? January 10th, 13 hours, one base candle. January 10th, 13 hours. This is the one. We have a drop, base and drop with hidden body. So this is the institutional order flow. See how cleverly our software identified this zone. This is the 75 minute supply zone. Why I am saying? Because see, this is the area prices entered. From this area only sharply came down. Again entered. From this area again came down. Because it is a high liquidity area. Mostly, if you are not aware of hidden body concept, you will ignore this drop. You consider this rally and it is not a valid zone. But if you add the hidden body, that is good enough to consider this as a valid leg candle, drop candle. Okay, drop, base, drop. And this is the one fine tuned with 15 minutes time frame. We need to fine tune with 15 minutes. We have a drop, base, drop is there here. This is a 15 minute supply zone. Drop, base, drop. Anything else before? We have drop, base, drop. This is violated, but the biggest problem is sometimes because of yes. So this is a drop, base, drop. This is a 15 minute zone. See, the moment I hide these gaps, we are getting clarity about these candles. Now let's fine tune these zones with 5 minutes time frame. The first one, do we have? Yes. See here, this is a drop candle, big candle. Drop, this is a base, and again this is a drop. This is the 5 minutes time frame. So it is there inside. So drop, base, drop. So that's why we can draw a fine-tuned 5 minute zone. Supply zone. Drop, base, drop and follow through candle. See here, price did not enter inside, just touched the proximal and sharply came down. Even before also, here you see in this candle, same thing happened. Just touched and sharply came. Maybe this is the area, strong institutional order flow. Maybe it could be a high liquidity area. So definitely we can plan our trade in this area. But what about here? So this is a failed ERC candle, drop we can consider. Looks like a rally, but see we have a big wick. If you consider this is a rally, you have to draw zone up to here. But if it is a drop failed ERC candle, if you consider, this is the zone. So this is also holding the prices multiple times. Prices did not enter. Just at the distal line, they are just holding and again pushing the prices back. But here it is tested zone. Here also tested. Maybe is it a high liquidity area? Yes, maybe, yeah. It is high liquidity. See here, prices entered, came down. Here also once again, sharply came down. This is a high liquidity 5-minute zone. What you have to do in high liquidity zone? We keep on taking trades until this is violated. Maybe tomorrow it may violate at the time you take. But we never know when a high liquidity zone will be violated. So that's why it already gave the zone performance point of view, it gave good return. But multiple opportunities if it is giving, we should not miss it. That's why if the risk is within your accepted limit, then there is nothing wrong planning one more trade. If it is violated, okay, you have to accept the minimum loss. But zone performance point of view already tested and gave a good return here. And here also see it is tested and gave a good return here. Multiple times already it gave good trade opportunities. Who knows, it may give one more opportunity. Or it might be violated, anything will happen. That's why we are taking the risk. Our risk management is very, very important. If the risk is within your accepted limit, your loss will be very small and it may not be hurting your capital. So we have two order flows here. We can plan the trades. Next one is delivery. This is a 3/1/25, 3rd January, 13 hours, one base candle. This is the one, drop, base, drop. Let me draw the zone. So this is the 75 minutes high liquidity zone. See, already tested 3 times. This is the first time, this is the second time, this is the third time. Okay, let's go to the 15 minutes time frame. Is there any 15-minute zones here? Yeah, here it is a drop candle. Maybe this is a failed ERC candle. This is the leg-in. You have 1, 2, 3, 4 base candles and a drop candle. Almost same as a 75-minute zone. But let me draw the zone up to type 2 proximal point of view. The 15-minute zone. So this is the fine-tuned 15-minute zone. Our goal is to find any institutional order flows. See, this 15-minute zone is also tested multiple times. But risk management point of view, you can't plan trades in 15 minutes. We need a 5-minute zone. Either that could be a high liquidity zone, or maybe that could be any 5 minutes order flows in any of these tests. No, we have rally based drop is there, but that is already gave a test here, and now it is here, it is violated. But here there is no fine tune. But have you observed, we have a drop candle, again a drop candle. Within these areas there could be some order flows might be there. Let's look into the 3 minutes, maybe 5 minutes clarity is not there. 3 minutes, let's see. Wow, 3 minutes, see here you have a drop candle, again another drop candle. Do you remember the new supply demand zone concept you learned? I explained earlier. Between two leg out candles, you can find this lesson in important strategies and analysis videos. In that playlist you will find this lesson, a new strategy of finding our zones. The lower wick of this leg out, this drop candle, higher wick of this drop candle, between definitely lower time frames. Lower time frame next is a 1 minute time frame. Definitely some strong institutional order flow will be there. Moreover, this is a fine tuned area at 3 minutes level, but not according to our imbalance concept. But when you have such kind of order flows, those order flows are very strong, but you find our zones at lower time frames. So let me go to 1 minute time frame. Let us check any 1 minute zones are here. See here, exactly we have a 1 minute zone here. We have a rally, two base candles, a drop candle and a follow through candle. Excellent. But let us draw the zone according to, I am drawing wick to wick here, because such kind of zones order flows are very strong, and moreover it is a 1 minute zone. So rally base drop follow through, this is the area we have strong institutional order flow. Is it tested? Let's verify. Price just touched the proximal line. It didn't go inside because it is such a strong order flow. See, the high of this candle is 343.10 paisa. Sorry, we have to say low of this zone. 342.30 paisa. This should be the entry, right? Proximal. This is a type 1 proximal. We have drawn wick to wick, we have drawn this zone. 342.30. See, high of this candle. That is also 342.30. That means prices didn't go inside, just proximal line itself. Then sharply prices were falling. So a very strong institutional order flow. If the risk is within your accepted limit, there is nothing wrong in planning a trade. But those who feel even this one is also tested, I can't take a trade, you can ignore it. Already this zone gave a good result. If those who feel wants to try once again in this zone, because the order flows are still exist within this area, and if you feel risk is small, even if it is violated, the risk is small. If you feel, you can try, nothing wrong. But zone's point of view, its performance point of view, already it gave very good profit. Those who took the trade on 10th January, probably they would have got a good profit from this zone. This is at 11 o'clock 33 minutes, 1 minute candle. Okay, anyway, let's go to the now 75 minutes time frame. See how we fine tune the zone. See how it looks like. See, every time prices are entering, coming down. Some more, a little more went, came down. Again some more, it may came, again came down. There are two possibilities. Now prices enter inside this zone and then come down, or might be violated. Anything might happen. It's about risk management. How you are planning your trade by taking the risk. If the risk is very small. See, actually it is a 1 minute zone, so risk is very small. Nothing wrong in planning another trade in this zone, those who can accept this risk. But those who are very strict, we don't want to take a trade, you ignore. You can look for other stocks. At one point we can say strong order flow is there in this area. That is what we have seen from this price action. First time, second time, third time. So this is about delivery. Next one is Godrej properties. This is a 10-1, 9-15, 2 base candles. Yeah, drop, 2 base candles and a drop candle. Not clearly visible here. This is the one drop. Let me hide these candles, you will get clarity. 10-1, 9-15, these 2 base candles. This is a drop candle. See? Drop, follow through candles. All these are all follow through candles. With hidden body drop, and again another drop, here drop base drop, and this is violated. But this is a high liquidity zone, drop 10-1, 9-15. We can draw a zone like this. So this is a 75 minutes supply zone, high liquidity supply zone, and it is not yet tested. So let me go to the 15 minutes time frame. Is there any 15 minutes order flows are available here? Yes, we have a rally base drop. So this is the one we can plan. This is the 15 minutes fine-tuned supply zone inside the 75 minutes high liquidity zone. Or you can also draw this drop base drop. This is the origin for this entire. Now we can delete this. This is the origin, drop base drop, picked up the orders, came down. Now this one we can fine tune with 5 minutes time frame. It's not clear here. Drop, drop, drop. But this one you have a drop base drop. Anyway, let us stick to our previously drawn zone. This rally base drop. Now within that area, the 5 minutes time frame, we have a drop candle, 2 base candles and a drop candle. So this is the way you can draw a zone like this. So this is the fine-tuned 5 minute zone, a fresh zone. So this is about Godrej properties. So next one is JSW Steel. In JSW Steel, we already tested 6 times this zone. This is a 3-1, 9-15, 4 base candles. 3-1, 9-15 JSW. Yeah, this is the one. Rally, 1, 2, 3, 4 base candles and a drop candle. So this is the 75 minutes high liquidity supply zone. So every time prices it is pushing. Slowly they are going up. See, higher high, maybe some more this time. Let's see. 15 minute zone, 15 minutes time frame. Any 15 minutes order flows are here. Have a rally base drop. So 125, this is 15 minutes, sorry, supply zone. Fine tuned 15 minutes supply zone. From here prices went and came down. They were nearing here. Or there is a possibility you might be say, let's check in the 5 minutes time frame. We have a rally, or we have a drop candle. This is already tested zone. Even if you draw, it is a tested zone. So we can't plan trade in this zone because it is already tested. But is it any new 15 minute zone created here? That we will see. Yeah, here you have rally base drop, the 15 minute zone. This is another fine tune. We have two 15 minutes order flows. This one is already tested. So recently this rally base drop was created here. And is it having any fine tuned zone? Yes, we have a rally, 1, 2, 3 base candles, a drop. Okay. I'm just checking whether there is any high liquidity on drop base, but this is already pierced in this candle. This is also large candle, so I can't consider this as a base candle. Big candle, very big. Okay, at least we have this order flow. So this is JSW Steel. And the next one is L&T. This is 8th January 9:15, 4 base candles. This one, yeah, drop 1, 2, 3, 4 base candles, drop 8th January. So this is another 75 minutes high liquidity supply zone, a fresh zone so far. So let's fine tune with 15 minutes time frame. We have a rally, 2 base candles and a drop candle. This is the fine-tuned 15-minute zone. You may say here also we can draw one more drop, 1, 2, 3, 4 drop. Why can't we draw a zone like this until here? What is the high of this candle? 3606.30, this high 3606.55. This is only 30, so we can draw zone up to some mistake. High of this candle is 3605.55, 3606, not 506. Okay. So 2 order flows we have. Let's go to the 5 minutes time frame. See, 5 minutes, lot of consolidation here. So this will be violated. So I am removing this order flow 15 minutes. No need to look into this. You may say it looks like a drop, base, a drop. Maybe all these are all looking like small candles, tiny candles. But if I hide, we will get clarity. Okay. And what about here? Here a failed ERC candle. Maybe this is a rally, base, a drop. If that is the case, we can draw a 5-minute zone. And this zone is already tested, so you can't use it. Okay. So anyway, L&T, there are higher chances it might be violated. But the only concern is here we have a zone, but risk is very high. Drop, base, drop. If you consider this is the area, some order flow might be there. Or if you consider this is a base candle, this entire thing is a consolidation. So that's why we don't have clarity. When we don't have clarity, better leave them. Just observe what is happening. So I'm adding L&T into our watch list. Next one is the last one. Yes, Maruti. High liquidity zone, already tested 3 times. So when it was created, 21 October 13, 1 base candle at 13 hours. October 21st. When 21st October. Yeah. So this is the failed ERC candle as a rally. You have 1, 2, 3, 4 base candles and a drop candle. So this is how our software identified this zone as a 75 minutes high liquidity supply zone. And this zone is already tested here, first time, second time and third time. Recently now prices went and closed inside the zone. Okay, this one we need to fine tune with 15 minutes time frame. Any 15-minute zones are there in Maruti? Let us verify. Here we have a drop, 2 base candles and a rally based drop. Either way you can. But is it still valid or is it violated? This is a 15 minutes fine-tuned supply zone. Let's check recent price action. So this zone is violated, so it's no more valid. But above this there are any order flows. Let's verify. I'm deleting this zone. Here you have a drop, 2 base candles and again a drop candle, big candle. Let us draw the zone here. So it's a very huge risk is there, but this is a 15 minutes. Inside any fine-tuned 5-minute zones, we should identify. Inside this area. So going to the 5 minutes time frame. Okay, here you have a drop, base drop is there. Very good, excellent. But is it valid or is it violated or is it tested? Let us check. We have a drop, base drop is there with a small hidden body pro gap is there. Probably that is the reason why prices came and sharply came down. That indicates a strong order flow here. This is the area. Prices did not go up to the zone. Before itself they turned down and market is went down in this particular stock. Next time also prices came but not near to the zone. But recent time what happened? Okay. Recently the prices entered into the zone and sharply it came down. And one more time also prices sharply came down. Maybe this is a high liquidity zone. Why I am saying, see here again rally based drop. Of course, you take entry within this zone only. That means institutions added new order flow in this area. Maybe this could be a high liquidity zone. Already tested 2 times. See, earlier it went deep inside and again came down. And this time, maybe because this is the first time it is tested deep inside, definitely we won't take trade. But what institutions has done? They created a new order flow and again pushed the market down. So, if anybody consider this as a tested zone and if you don't want to take a trade, leave it. But those who wants to accept this risk, maybe it could be a high liquidity zone because of this rally based drop. Not only that, multiple times, already 2 times it is tested. It may give you some hope. You may think, okay, let me try, let me take a trade. This could be a high liquidity zone. That way, if you want to take a trade, you can plan a trade. But remember, we never know when high liquidity zones will be violated. Until the day it violates, until then we will enjoy the profits. Next trade itself, if it is violated, your trade will be stopped out. But zone point of view, it gave a good performance. See, it entered and sharply prices came. It gave a good profit. Here also, prices entered and again pushed the market down, maybe given a good profit. That is performance point of view. But your trades point of view, whether to accept or not, that is depending on our individuals. But if this is a high liquidity zone, the general characteristics of high liquidity zone is for trades, trading point of view is we keep on taking the trade until the day when it violates. We never know when it is going to be violated. That is the only one hard point with respect to the high liquidity zones. Okay, this is the only one order flow at present looking like a high liquidity area. This is the area. So this is Maruti. That's it, right? We don't have any more high liquidity zones. Yes. So total how many we identified? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 high liquidity zones. Out of these 11, first 2 are daily high liquidity demand zones. Next 3 are daily high liquidity supply zones. And remaining 1, 2, 3, 4, 5, 6 are 75 minutes high liquidity supply zones. See, this is how you should analyze the stocks. After that, your trade plan you should look into 15 minutes time frame. If the risk is small, you can plan your entry buffers. If the risk is high, you may plan a deep inside the zone you plan the trade. I'm not talking about the stocks in general. And go to the 15 minutes time frame, you should plan your 15 minutes target zones. Or in this case, any 15 minutes demand zones, you should look into that. Here there is no clear 15 minute structure here. Somewhere here you have rally, base, rally is there. So what you do, you plan, this is our target. But does it really reach up to here? Maybe or may not be. We never know. A new 15 minute zones might be created once the market starts tomorrow. Maybe what may happen, a drop will be created here. Base is already there. What happens tomorrow? Again a rally candle is created. Let us assume institutions. Before taking the trade, the zone is completed here. Or while after taking the trade, the candle is completed. Now it is a rally candle. Now immediately you have to change your target to the revised target, something like this. You have to ignore this. When prices are entering here, you have to exit your trade. You may not be getting RR, but already you took the trade. At the time candle is not completed. Whether you have RR or doesn't have a proper RR, you don't care because already you are in the trade. You just exit here. That's it. Whatever the profit, you will enjoy with that profit. Maybe it could be a small. Why? Because in the market a new zone is created. And before the candle completes, we got the trade. After we took the trade, the candle is completed. That resulted as a leg out candle. Many times what happens, prices enter into this zone and sharply again it will come and price will be closed here. At the time, this is not a drop base rally candle. Drop base, some kind of drop. So it's not a demand zone. At the time, there are higher chances prices will be moving up to this area. So this is the way you should understand during the live markets. Your trade plan is different, and trade plans, what you plan might be changing once you are into the market. Suppose tomorrow in this drop base, a rally candle is created. Before taking the trade, the candle is closed here. Next candle prices entered into. Do you take a trade? If the RR is not there up to here, you don't plan your trade. You don't take this trade. You just cancel this your trade plan. Why? RR is not there. That kind of decisions dynamically you have to take when you are in the live market. See, trade plan is not a fixed trade plan. Initial plan gives you an idea, a fair idea. But live market is dynamic. That's why any changes are happening, immediately you should update your charts with those changes. If those changes are not in your favor, you don't take the trade. You just simply ignore that stock. So this is how you should make use of our NeoStock software high liquidity zones and plan your trades. Hope this information will be useful to you. See, maybe today those who are seeing this report immediately, for you it is like a new video. This analysis video might be helpful to you immediately for trading point of view. Please remember, actually I am supposed to give a declaration before starting this. I forgot it. So I am telling you this, whatever the analysis I am doing, they are not for trades point of view. That is only for education point of view, to explain the power of the NeoStock high liquidity zones, or to explain the power of NeoStock software, how it is identifying the zones. Of course, maybe after tomorrow, this whatever the analysis we did, it is a old analysis. For all the people, whoever is watching after tomorrow, probably it will be a learning for you. But before that, whoever is watching this video, please remember, my analysis, whatever I did, is only for education purpose, because all these are all training videos. I am not giving any recommendations, because I am not a SEBI registered. I don't have any authorization to give you recommendations. That's why I am not doing any trade plans here. Where to take the entry, where to exit. I am not explaining those things. I believe you are all having idea, or if you don't have idea, you have to consult your financial experts. But those who completed the course, those who wants to become independent traders, those people, according to your subject, you have to take your own decisions. I am only explaining the analysis part of how you can analyze the charts by taking the help of NeoStock software generated zones, high liquidity zones. And lesson 21 concept, 21.3, the third video in lesson 21. In that video, I explained how to make use of high liquidity zones. For that concept, all these are all examples by taking the help from NeoStock software. So this is my declaration about this analysis. Hope this information will be useful to you. Next video we will check the performance of these videos. Okay, this is the first part of this video about daily or 75 minutes HLQ zone analysis in lesson 29. Let's all meet again in our next video to check the performance of these high liquidity zones. Thank you.